morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures. I've got some questions on Twitter as to what I've got going on this chart. It's a pretty basic chart. I've got two standard deviation Bollinger Bands based off the 20-day simple moving average. I've got third standard deviation Bollinger Bands, which we may need today, based off of the 20-day simple moving average. So 2 and 20, 3 and 20. Then I've got moving averages. The green line is a simple moving average, which is just the middle Bollinger Band. The green line is the 9-day simple moving average. Then I have three exponential moving averages, the 50, the 100, and the 200. Why do I use exponential moving averages? Because they seem to be more accurate over time as far as being entry points on shorter term trades and areas of congestion on longer term stuff. Not a big simple moving average guy. So that's the lay of the land on the chart. So what are we seeing here? We are seeing a market that continues to be in a band ride. The bands are effectively blown out. I mean, they're at 8.6 this morning. That's above the blowout line. But nobody told the market that. So we had a little bit of a bounce yesterday. It was a bounce that couldn't even get over the 200-day exponential moving average there, 97.98. And really what we're seeing is the mini going the way of the Russell futures and what they had been doing, into last week. So here's the Russell. You had the break below the 200. You've had really no effective attempts to get back, and it continues to bleed lower along a band ride. Don't think for a minute that just because we have gone in excess of the 200 that this is miraculously going to stop. The damage we've done this morning in trading as low as 56.25 exposes areas for me, this week in the 1840 area. And, if you're saying to yourself, wow, that's a long way, you know what? When I told you guys the 200-day exponential moving average was a magnet up at 68, it seemed like a long way too. There is tremendous technical damage that has been done to this chart. Some of it is not really repairable. The 2013 uptrend is over. It is over. We are no longer in that uptrend. We have broken the 200-day exponential moving average. We have tested it. That's what we did here, and we failed miserably, and we've stayed below. And we've been trading below it now for 3 sessions. Absent some really good news bomb that is going to send this market careening higher, the market trading in a vacuum is going to be and continue to be a sell rallies market. There's no interaction with the middle band. Our next interaction with the middle band is more likely than not to occur below the 200-day exponential moving average. And what I mean by that is this moving average is going to continue to drop. As it sheds these higher prices, it's going to drop rapidly. It is literally going to look like somebody diving off a cliff if it doesn't look like it already. Reverting to the mean on a shorter time frame tends to be tends to happen at the 20-day. But expecting a move from here to 1945.66 isn't really practical. So I expect some bounces. I expect them to act like bear market rallies. We got into a little bit of a little one yesterday, but it didn't even do what it could have done. We couldn't even get much over 90. I expect those rallies to be sold. If I sound bearish, look at the chart. Okay? I got accused for a long time of being a dip buying permabull because the chart looked like that. Now we're seeing some changes. We're seeing it begin to roll over, and you have to adjust. What I've told my people in my room is you have to adjust your psychology to trade the market that you're in, not the market that we had last year and not the market that you want. The market doesn't care what you want. The market wants to sell rallies, and at least for this period of time, it wants to keep making lower lows. Will we have a bear market rally? Yes. Will I sell the heck out of it? Absolutely, just like all the others. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. It's been a very exciting time to be a subscriber, and as usual, it's been a very profitable time. So come and come check us out. I think you'll like what you see. We posted some stuff from there yesterday, trading off the lows the other day. We caught that crazy town low for about 20-25 handles after we exited the shorts from above. I will be carefully watching the distance from the 45-day pivot today to see if we get another reading in that area if we persist on going lower. All right, take care, everybody. Catch you tomorrow with another webcast. Trade them well.